All right, highlight for today, down over 1,000 in the cash Dow, down over 100 in this June S&P. The true rollover, and this is just an important note on rollovers in the index, is we're going to roll the SEP. The rule of thumb is wait till the SEP starts doing the same or more volume than what the current front month is. The current front month has been June, and if there's more volume in the June, trade the June. As you see the volume start to cross over, which you typically see on the Friday, which is tomorrow, and roll over, and then move to the SEP. So you got rollover, you got the headwinds of the Fed saying with Powell, things aren't as rosy as maybe the market was hoping he might have said, and that was the beginning of what could be just a healthy correction, right? We've been up so much. If you look at a daily chart, it doesn't hurt. Let me pull a daily chart over here. It doesn't hurt to come off. These are profiles, right? So it doesn't hurt to have a decent down day. That's not the chart I wanted to bring over. I wanted to bring over this daily. Give me a second. This daily chart, just a simple bar chart. And you could see how far we've come from late March and then some. We broke out of this range in here, grinded up, and now we've had some big down moves like in here. We had in here. This was some China rhetoric that got hot a couple different times. The market eventually said, hey, it's going to recover sooner rather than later. All the stimulus is working, and that's great. It's the first day of the Fed, not being as optimistic, like I said, as a lot of the investors want. And there's always that in this huge rally. You got to remember, this comes from 2150 to 3250. So you got 1,200 points, 1,100 points, almost back to where we started. And then you get the NASDAQ closing over 10,000. They're back to and through where they started because all the technology influence, all the tech stock influence. So you take a look and you think about all that, and you're like, wait a second. Now all the retail jumps in. They jump in, and that's the first down day, right? And so this is a correction. It can go down a lot further and still overall look pretty strong, especially on this rally. One thing I wanted to leave with, and I've said this in previous highlight videos, is when you have a big gap higher or lower, like today was, and you spend the first 30, 60 minutes and can't go higher, it means you don't have buyers. It means price isn't cheap enough. When you discount price, 100 handles, almost 1,000, was 800, 900 points in the Dow when we open. And after a little time goes by, you can't find buyers. It's got to go lower, right? Think about the product and price of anything. T-shirts, try to discount them for $20, no buyers. $15, no buyers. $10, no buyers. You got to keep going lower, and that's how these indexes work. And I said this over an hour ago. Even some good news is being dismissed. You had some news out of Texas that day over day, the first decline in hospitalizations in the last 7 days or last few days. That was an exhale moment. We couldn't really rally. But you got a little bit of a spike, 2.5% versus 2% in Florida cases, and we break. So context is really important. Understand where we're at on the map, understanding the tenor of the day, how it's tough to facilitate any kind of upside. So when we remove this and understanding about picking bottoms and picking tops, say picking bottoms, very dangerous proposition. So one thing and one cure is to make sure you define your location by being able to take profits ASAP. You have to be impatient being long. If it's not going your way, you're just buying knives all the way down. A lot of downside magnets that are working, whether it's big orders and big liquidity, where the market's trying desperately to find buyers. Keep that in mind and understand the transition of rallies that get totally taken away and then it becomes the new move that gets retraced. You find that in previous highlight videos I've done that we post to YouTube. But always remember, a big gap open, down in this case, prices are discounted, but they're not cheap. How do you know they're not cheap? Because we gave it time to find buyers. They couldn't do it. So it was downside, right side, played from the short side. Be safe, be careful, manage your risk before you take it.